All right. It is a great day in South Florida. My name is Chris Igoe. Welcome to Living in South Florida. If you are new to the channel, welcome aboard. And if you are old to the channel, well, thank you so much for continuing to participate in my journey. Today, we're going to get right into it. We've got Zillow, we've got Redfin, and they have confirmed that home prices are dropping fast. Inventory is exploding. But I want to drill deep into what that actually means, because there are so many content creators that are out there on YouTube that are taking data and misapplying it, at least relevant in my market, right? So each market is different. I'm finding so much information out there, which is the equivalent to me of a steaming dumpster fire of bad information. So I want to drill down into what the market is actually like, the economic conditions that we're seeing right now, and then drill deep into what's happening in my market so that you have the best information to make the best decisions for yourself, for your family, and for your financial bottom line. I recently did a video showcasing what I expect to see as the market dynamics shift, as the economy starts to deteriorate. And one of the things that I talked about was the fact that the government would very likely spin this recession that we're in into something more palatable, because let's face it, the government or the political figures that need to be reelected are likely not going to get reelected if they confirm a recession, or if they talk about inflation in a big way, if they highlight the fact that joblessness is a real concern. If they actually tell the truth, the odds of them getting elected in the midterm elections in November are slim to none, or at least they decrease radically. So we're seeing a lot of misinformation coming from all over the place, and I hope to be able to separate the wheat from the chaff and tell you the truth, and we're going to get into it right now. Now, before I go too deep, if you are new to the channel and you find this content valuable, then please subscribe. It means the world to me. It helps me go out there and create more content to be able to serve and support you at the highest level. And if you are outside of my area, which a lot of you are, I know there's a big national audience out there. If you need help in your area and you would like a referral, someone I know, like, trust, and have vetted that is an all-star in your area, then please reach out. And the best way to do that is to click this referral tab here, and I will set you up with the best of the best in your area, and they will absolutely get the job done for you, irrespective of market conditions. All right, let's get right into it. As I mentioned previously, we've got inflation, we've got recession, and we got the 2022 midterm elections. I suspect that you are going to continue to see everybody do whatever they can, at least within the powers that be, to prop themselves up to get reelected. So you're not going to see headline news that is too alarming, because the people that need to get elected or reelected need to play the game. And that's exactly what they're doing. But I think we can all agree that we are experiencing tremendous inflation. We are experiencing a recession, in spite of the fact that they redefined what a recession is, at least within Wikipedia and to the general public. And they talk about transitory inflation. They talk about recession is no longer 2 quarters of negative economic growth. I got news for you. We all know that we are in an inflationary environment. It's not 9% or 9.2% like it was in July. Whoop-de-freaking do. It's 8%. It's still terrible, and it's a real problem. So how does that impact us? How does that impact the housing market? Let's get into it right now. Oh, sweet mother of God. Oh, what are the joys from working at home? All right. We got a wiggler tooth. There you go. All right. Love you.
Can we do it later?
We can definitely do it later. Keep working on it, all right? All right. Let's get back into it now. So if you're looking for someone to pull your teeth, I am absolutely not the right person for the job. But if you're interested in knowing what's going on in the market right now, hopefully I can be more entertaining than a trip to the DMV, which I had to take today. All right, let's get back into it. I'm taking off my dentist hat. I'm putting on my housing market hat, and away we go. So housing affordability has fallen to its lowest levels since the Great Recession. Now, we are starting to see a lot more inventory come on the market, which means if you're a buyer, you've got options, you've got leverage, you can negotiate a much better deal than in the near distant past. 6 months ago, when interest rates were significantly lower, when we would list a home, we would have 50 to 100 contracts. We would have hundreds of showings. You'd have people scratching, clawing, trying to kill the other person. I'm not trying to kill the other person, but they were hyper aggressive and willing to give away their firstborn in order to get their dream home under contract. Well, that's not what the market is right now. And thank goodness. Right now, we've got a lot more inventory relative to recent past, although historically, certainly lower than it's been. But we are trending into a neutral market. We are trending into a buyer's market. And I'm going to drill deep as to what that means. So if you're thinking about selling, you want to be in front of that. If you are thinking about buying, you've got way more options. And as things start to deteriorate economically, as we start to feel more pain, as the consumer feels more pain, you're going to start to see people get squeezed out, and you'll start to see foreclosures and distressed sales, which really haven't been there. They're going to start to play an impact on the housing inventory. Hasn't happened yet. I think we're 18 to 24 months out from that. But if you are prudent, if you are patient, very likely you're going to find yourself the opportunity to score a better deal. Now, I also believe that my market is more insulated from that because in South Palm Beach County, in Broward County, there is no more land. All of the land has been developed. There is no place new that they can develop and build more homes. So when you have a scarcity of resource, if you have scarcity of land, and that's what we have here, typically you're going to see continued appreciation. Now, I think that looks like 2 to 4% as we trend forward, but let's see what some of the experts say. Let's see what Redfin says. Let's see what Zillow says, because I know there's a lot of content creators out there. Zillow and Redfin are all pointing to a massive crash. Well, let's see. But before we go too deep into that, let's also address the inflation elephant that's in the room. And we're looking at 8.5% in July versus 9.1. As I mentioned, that's high. It's not good. You don't get a cookie for 8.5% inflation, but it's transitory, so more will be revealed. Nonetheless, it was a downtick from where we were at in July, and the market kind of baked that into the cake. And what did we see? Well, we saw interest rates come down. That's a great thing. I talked about being Nostradamus and being able to predict what the future would be. Full disclosure, I'm not the smartest guy in the room. I was a stockbroker for 18 years, and I know well enough that I will never call the absolute top. I will never call the absolute bottom. I'm not that smart. Warren Buffett isn't that smart. What I do know is the trend is not your friend. And interest rates are absolutely going higher. And yes, we did see a downtick, and then they came back up too. So where will they be in the future? I suspect significantly higher, but I'm not going to sit here and nail myself to the cross and tell you I know when it's going to happen. I don't know anything, but I'm committed to giving you the best information so that you can make the best decisions for yourself, for your family, and for your financial bottom line. If you're new to the area and unfamiliar with South Florida and you want to know about every city that exists within South Florida, then please click the link below, check out our city/relocation guide, and it's going to tell you everything you want to know about every city in South Florida. Separate to that, check out the playlist because I've done content in every area, in almost every subdivision. And if there's an area that I have not covered that you want covered, then please let me know in the comments down below, and I'm happy to do that. But let's get back into it. And let's see what Zillow has to say about July 2022. Now, yes, I'm aware that this is a lagging report. I'm aware that we are in August. But Zillow, according to most people, is the smartest guy in the room. Let's see what they have to say. Now, let's remember Zillow, who not that long ago shut down their iBuyer business. They were hemorrhaging cash. And as an operator, boots on the ground, who's done many transactions with Zillow as the broker, as the selling agent, I can tell you that these Zillow owned homes that they purchased and they flipped were horrible transactions. They were clunky. They did not have the people, the resources, the support staff in order to be able to close. Having done this boots on the ground, I can tell you those deals would not have closed if I did not bend over backwards to ensure that they did. It was an enormous amount of time. Now, we'll do whatever it takes to get the job done for our clients. But I got news for you. There were hundreds, if not thousands, of deals that did not close because the agents didn't know how to handle and support them. And Zillow's iBuyer slash seller program was a disaster. They got out of that business because it was hemorrhaging cash. It did not work. They could not support the actual workflow and transaction. Now, their algorithm may be right, their platform may be right, but I doubt it because the fact is they overpaid for most of those homes. Why am I sharing that with you? Well, I'm sharing it because Zillow is not the end all be all as it relates to anything. But here's what they say. Zillow says they're revising their outlook downward from June, and now they're forecasting 7.8% home value growth over the next 12 months. Interesting. The market's going to crash. That's what everybody says, right? Well, Zillow is out there saying the next year looks like 7.8%. That's a far cry from a market crash, but that's what they're calling for. Let's drill a little bit deeper and let's see what Redfin has to say. So, Redfin, in their August 5th report, goes out there and says a lot of things, right? So, housing market update, early stage demand picks up as mortgage rates fall to a 4-month low. That's great, but let's see what their chief economist has to say. And he goes on to say home buyers may catch a break this month as rates have come down nearly a point from the recent highs on fear of recession. Whoop-de freaking do. No kidding. Well, let's just play this tape forward a little bit. Every 2% increase in interest in mortgage rate takes away $200,000 worth of buying power. So previous to the last Fed announcement, we were north of 6. We're now underneath that. The movement on those interest rates is going to change day to day. You need to know whether you can afford the payment and whether the financials make sense for you in purchasing a home. And if they make sense and it's right for you and it's the right home and it's your right lifestyle, then by all means proceed. But if it's going to put you in an economic squeeze, then don't do it. It's not the right time. Wait. But as per the chief economist from Redfin, you can get a deal in this market. And I've been talking about that for months. So let's keep on trucking. And where does that take us to? It takes us back to Zillow. Zillow, who exited the market, they exited the iBuyer business, which lots of people read to mean they know that real estate values and housing market values are going to tank. That's why they exited the business, right? Wrong. They exited the business, as I mentioned before, because they could not handle their capacity. They could not run the business the right way. But they got right back in. And now they're partnering with iBuyer OpenDoor. And they intend to capitalize on the home value appreciation that exists as per them, 7.8%. So they closed down a business that wasn't working and they reimagined themselves back into that business by partnering with OpenDoor. But be careful what you ask for, because if you pick the wrong partner, you're going to have a hard time. And OpenDoor, not the best. But don't take my word for it. Let's see what the FTC has to say. No bueno. Well, I know that. All right. So OpenDoor was fined $62 million to settle claims of cheating home sellers. What did they cheat those home sellers on? Well, they basically fraudulently marketed their services as being the best solution for sellers to net the most money. And the truth of the matter is, they charge exorbitant fees to home sellers that are unsophisticated or unsavvy and think this is a cleaner, faster process, when in reality, they would have made much more money had they hired a real estate professional. But it is what it is. And as you can read here, the vast majority of consumers who sold to OpenDoor lost thousands compared to what they would have realized in net proceeds from selling on the market, because OpenDoor's offers have been below market value on average and its costs have been significantly higher. So this is not news to me. And now Zillow, who was clunky and did not have the support staff to execute these transactions, maybe they have a marginally better operator in OpenDoor, but OpenDoor's record is not clean. They're looking to cheat you any way they can. Now, what I won't stand for is the content creators that are out there that are talking about these moves that have happened from a macro perspective, in insulating their own businesses. When I say their businesses, I'm talking about OpenDoor and Zillow, but they exited these businesses because the business was terrible, had nothing to do with what the market dynamics were. They did it because they were hemorrhaging cash, and now they're looking to capitalize. So when I talk to somebody who is out there talking about it's the end of the world, I just have to point back to Redfin. I just have to point back to Zillow. They're looking for 7.8% growth over the next year. And I think that is probably something close to what we're going to see, at least in my market. That does not speak to every market. Other markets are probably going to get whacked all over the place, depending on where they're at. Florida is free, it's wide open, it's pro business, it's pro family, and it's a great place to live. You can't beat the weather. Plus, there's no state income tax. But we had 900 people who moved to Florida every day pre pandemic. That number has increased, it's never slowed down. So, do I suspect that we're going to see a massive crash in our market? No. I do believe we're going to return to 2019 numbers, and let's get into what that looks like so that you have a full understanding of what the market was and what it is today. All right, we're going to start at the top and drill down. I'm going to start at South Palm Beach County, give a snapshot of what that looks like. Bear in mind, these numbers are from last month. July numbers won't be out until mid-August, and well, we're already in mid-August, but they won't be out for another week. So please understand that whatever numbers I'm sharing right now, they have absolutely increased relative to July. But let's see what they look like so you've got a full understanding, and we can go from there. So South Palm Beach numbers, and what we're looking at here in terms of market snapshot, market dynamics, months supply, which is the number of homes that are for sale, how many months it would take for the current existing inventory to sell off, jumped from 1.5 months to 2.3 months. That's a big uptick. It's 53%, 5-3. Big number, right? If you look at the number of the inventory of homes for sale, you'll see they jumped radically, up 25%. That's a big number. I can promise you, as we go into next month, as we report August numbers are going to, July numbers are going to be worse. August numbers are going to be worse. That trend is not favorable if you are a seller. If you are a buyer, they're much more favorable because you're going to have more choices, more options, and that's what I want you to have. Now, if you are thinking about selling, click this link below. It will take you to our seller's guide, and it will tell you everything that you need to know if you're thinking about selling your home. And then from there, I will connect with you to showcase exactly how we find the one buyer on planet Earth willing to pay more than anybody else, irrespective of market conditions. So in spite of all these changes, the big shift that we're seeing, we are still setting records, giving our sellers exactly what they want in this market. Well, let's keep on trucking. Let's look at some of these other numbers so you can get a real sense of what's happening in terms of the market conditions right now. Again, bearing in mind, these are last month's numbers. So median sales price, average sales price, both of those numbers went up pretty big time. So 26%, almost 27% from a median sales perspective. Average sales price was up 15%. Those are big jumps. Those are also based on much more favorable lending rates. So those buyers who purchased those homes locked in their rates way ahead of the big changes. So you can see inventory increasing, you can still see prices increasing, but I suspect that what you'll see as we move forward is those numbers, at least in terms of value appreciation, they're going to decrease. I don't think we're going to continue the 12%, the 25%. I think we're going to see something closer to 2 to 4%. However, remember, Zillow's out there at saying 7.8% for the year. Yet to be determined. I don't know, but I'm committed to giving you the real information so that you know what's actually happening, unlike a lot of these other people out there that are looking to scare the living bejesus out of you. All right, so I went from South Palm Beach County and I drilled down into Boynton Beach, which is the city where I live. And let's look at what those numbers are, because Boynton Beach, specifically the canyons, I'm going to go into the canyons in granular detail in a moment. I will be brief, and thank you for watching this long. I hope that I'm not putting anybody to sleep out there, but this is the truth. This is what the market looks like. We went from 1 month supply to 1.5 months supply. Again, lagging number. That's an 80% increase. I can promise you that the month's supply of inventory, when they get released in a week, is going to be more than that number. Relative to the past, it's still a favorable market. But I can tell you, we're trending into a buyer's market. We're jumping way past the neutral market. And if you're looking to buy, you've got options. Now, if you are thinking about buying, then please check out our Florida Buyer's Guide, and it will tell you everything that you need to know about buying a home in Florida. And then from there, I'll reach out to you, or my team will reach out to you, and we will showcase exactly how we find your dream home, dream lifestyle, and get you the best deal possible. Let's continue to look at Boynton Beach numbers because they are very important. And they're also very misleading. So if you look at these numbers, average sales price, median sales price, they have both increased 24%, 22%, big value increases. Again, I don't suspect we're going to continue to see that type of value appreciation. I think we're going to return to 2019 appreciation, and I know we're going to see a heck of a lot more inventory. But let's see what it looks like within my zip code, get total granularity as to what the market is. I created this granular data based on using my zip code of 33473, and I did that intentionally because most of the communities that are within this zip code are very similar. So you've got the entire Canyons Enclave, Canyon Trails, Canyon Springs, Canyon Isles, Canyon Lakes, all within this zip code. There are some others, but they're very similar in design and layout, similar products. You've got gated communities, private resort style amenities, built out specifically for families to come in, max out South Florida living, thrive, and be happy. But these numbers are very helpful because it's going to showcase more in real time as to what the numbers are actually like. And what you'll see is more current data, right? So if we go into, well, this is going back to 2021. I'm going to go back further. All right, so I broke this down on a quarterly basis for the last 10 years to give you some historical perspective relative to where we're at right now and where I suspect we're going to be in the future. And what you're going to notice is look at these numbers. All right, so this is going, and I'm going to take it back even further. All right, we're taking it way back, way back. All right, so we're taking it way back. We're going to look at what the numbers are like right now relative to 2019, relative to when it was the worst, when there were lots of homes for sale and nothing selling back in 2007, 2008. And this is where we're at right now. And what you'll notice is there's a major uptick in inventory of supply relative to amount of sales. Well, that was not the case. Now, again, this is quarterly. That was not the case as you went back when the interest rates, when the frenzy was at its worst. And what you'll see is there were lots more sales than homes for sale. And that's just the way it was. When you've got the government and interest rates and all kinds of things happening, and there's so much demand and so little supply, you're going to see those kind of metrics. And that's changed, right? So this supply relative to sales is going to be worse next month and into the future. But if we look at 2019 to get an idea of what it will probably look like, I suspect it's going to revert back to that, which is where you've got relative to, well, right now it looks like there's 30, close to 40 homes for sale and close to, I don't know, maybe 50, 60% of them selling. Well, that was not the case back in 2019. In 2019, there were 110 homes for sale and 20 of them sold, right? So roughly 18, 19% of the homes sold. That was not the case anytime recently, but that's what you can expect to see moving forward. So if you're thinking about buying, you want that kind of leverage. You want that type of dynamic because you can go out there and score a good deal. If you're thinking about selling, you better move fast because the inventory increase is not your friend. The trend on that is not your friend. You want to be in front of that, or you're going to be at risk of a lot more supply, a lot more competition. And if you hire the right person, or excuse me, if you hire the wrong person, you're probably not going to get what you want. This is the big scary chart that goes back 15 years. And you can see when we were in the worst of it, there were 110 months of, more north of that, 150, almost 120 months of inventory for sale, and none of those homes selling, right? Okay, well, that's where we were at. This is where we're at right now. Now, let me get that a little bit more granular because it's hard to see on that chart. This chart is way more instructive, right? So in 2021, May of 2021, again, this is going to be on a quarterly basis. You can see there were 0.4 months of inventory. Well, that was the heat of the market. That was the intensity of the market. That's when there was no supply and tremendous demand. That's not what we see today. You can see we're at 4.2 months of inventory. 5 months is a buyer's market. It's a buyer's market. So if you're thinking about buying, you got way more options. If you're thinking about selling, you've got a lot more competition. And look how quick that increased from zero point 0.7 in May of 2022 to right now in, well, not right now, but last quarter, which is 4.2 months. That's a big shift. I've been talking about that for a long time. So if you are working with the right people, you have a competitive advantage. If you don't, if you're working with somebody who doesn't understand the market and the market dynamics where you live, you're in real trouble. And I'm going to pop in some of the inventory that's for sale right now. I have consulted with so many people within Canyon Trails, within the subdivision that I live, as well as the Canyon Enclave, and met with so many sellers that insist on overpricing their home. And those properties sit forever. They don't sell. And then if they don't sell, they either go temporarily off the market, which will never be seen again, or they cancel or expire. But there's a lot of unsold homes because there's a lot of realtors that will allow their clients to dictate what the price of the home is. That is a disaster. If you want to sell, you must work with the right professional. If you want to buy, so similarly, you need to work with the right professional, and we would love to help. So if you're even thinking about moving to or living in South Florida, you've got to give me a call, text, DM, send a carrier pigeon. Whoa, I almost forgot the best part. Forget about everything I just said. All of that's true. All of that's relevant. All of that's good. But maybe I'm wrong. Maybe I'm, could I be wrong? Sure. I've been wrong before. And I'm sure there are lots of other people who have been wrong too. But let's look at what the bigger money is. Let's look at what some of the development is. Let's look at some of the new construction starts that exist within my region to see what other people who arguably should have back access to more information than I do, although I doubt it. But let's just go check that out, right? Because if the market is known to be crashing, you can expect there's not going to be a lot of new development, right? Right. So let's check that out. All right, so I track this stuff granularly. I want to know what developments are happening. I want to know what new construction is happening. And what I've done is sort all of the development, all of the new projects, all of the new construction that's happening in my market over the last 90 days to give me an idea of what other people are doing. I want to know if they're building, that's good. If they stop, if it's drying up, like a lot of these content creators are saying that it's not happening anymore. Well, that might be true in their market. It's not true here. We've got almost 5,000 new projects that have been started in the last 90 days. I'm not going to go through all of them because we'll be here all day. But what you can see is we've got all kinds of new developments, all kinds of new projects. There's 5,000, excuse me, there's 25 per page. And there's how many pages here? 197 pages. There's 4,000, almost 5,000 entries of new projects, new construction, new builds, new things happening with new money in the market. And they start at $25 million and go all the way down. But there's a lot of new development happening. So when people tell you that the market is shifting and there is no more investor money coming into the market, it's baloney. There's plenty of it coming into my market. Other markets, maybe not the same, but that's what it looks like right here. I hope you found this content valuable. And if you did, please like the content, subscribe to the channel. It helps me enormously with the algorithm. And if you're even thinking about moving to or living in South Florida, you've got to give me a call, text, DM, send a carrier pigeon, a smoke signal by any means necessary, because we've got your back when it comes to moving to or living in South Florida. And until next time, peace.